Tax season. For some people, it's like hitting a mini lottery. But for others, well, it's a painful reminder of what they owe. But what if I told you that that surprise refund or that surprise bill isn't really a surprise at all? Today, we are going to pull back the curtain and figure out what is really going on with your tax refund.
So which one was it for you this year? Did you get a bigger refund than you expected and immediately start planning a vacation? Or was it smaller, leaving you scratching your head wondering, hey, what changed? Or maybe you even had to write a check to the government. Ouch. No matter what your situation was, you're in exactly the right place to understand why it happened.
You know that feeling when you see the final number? It can be a total roller coaster. But here's the good news. You don't have to just be a passenger on that ride. Let's get you into the driver's seat and really understand what's going on.
I mean, think about it. You spend hours, maybe days, gathering all your documents, punching in numbers, and then you finally hit submit. And then you see it, that final number, your refund or the amount you owe. And it can be a huge shock, right? Whether it's a feeling of pure relief or total panic, that one number tells a big story about your entire financial year.
Okay, so to really get to the bottom of this whole thing, we first have to bust the single biggest myth about tax refunds. Let's completely reframe what's actually happening here.
Let's just get one thing perfectly straight. A tax refund is not a gift. It's not a bonus. It's a reimbursement, plain and simple. It is your own money that you overpaid to the government throughout the year, and they're just giving it back to you. And this right here, this illustrates the point perfectly. When you get a big refund, it just means you've been overpaying your taxes all year long. You've basically given the US government an interest-free loan. I mean, think about that. That's money you could have had in your own bank account, maybe earning interest or paying down debt or just helping with bills with every single paycheck. So if a refund is really just us getting our own money back, how does the government end up with that extra money in the first place? Well, it all comes down to something called withholding. See, the U.S. tax system is what's called a pay-as-you-go model. So instead of you having to pay one giant, scary tax bill at the end of the year, your employer just takes out a little bit for taxes from each of your paychecks. This whole process is called withholding, and believe me, it is the key to everything we're talking about today. It all kicks off with one simple form, the W-4. This is what you give your employer, and it tells them how much money to hold back from each paycheck. Then, all year long, those little payments get sent to the IRS. So when you file your tax return, you're basically just settling the score. You're comparing what you already paid versus what you actually owed. The difference? That's your refund or your tax bill. Okay, so if withholding is the how, what's the why? What causes the amount we owe to change so much from one year to the next? Well, the answer is pretty simple. Life. Life happens, right? And when it does, your taxes almost always change with it. Getting married, buying a house, having a kid, these are all major life events that can have a huge impact on your final tax bill. And you know what? It's not just the big stuff. Even something as common as starting a side hustle or getting a second job can completely change the numbers. And it goes way beyond those big milestones. Your refund can also swing wildly based on other things. Did you start a side gig or maybe sell some stock? That's new taxable income. Did you suddenly qualify for a tax credit you didn't get before, like the Earned Income Tax Credit? Or maybe your eligibility for one changed. All of these little adjustments can add up and lead to that big surprise at tax time.
All right, now here's a situation that can be really confusing. What happens when the refund amount you calculated is different from the check you actually get in the mail, and there's no obvious math mistake on your return? What's going on there?
So sometimes your refund gets smaller for reasons that have absolutely nothing to do with this year's taxes. The government has this thing called the Treasury Offset Program, and it basically allows them to use your refund to pay off other debts you might have, like unpaid child support or state taxes. They can also hold on to your refund if you forgot to file tax returns in previous years, or sometimes if your return just gets flagged for a closer look.
Okay, so far we've spent a lot of time talking about what happened in the past. But here's the best part. You can actually take control and stop these surprises from happening in the future.
And hey, don't just take my word for it. This is a direct quote from the IRS itself. They actively encourage people to do what they call a paycheck checkup. The whole point is to make sure the amount being withheld from your pay is as close as possible to what you'll actually owe. No more surprises.
And you know what? They've made it super easy. The IRS has a fantastic tool right on their website called the Tax Withholding Estimator. Honestly, this thing should be your new best friend for getting your withholding exactly right. And it's so easy to do. Seriously. Just head over to irs.gov and find the tax withholding estimator. You'll want to grab your latest pay stubs and maybe your last tax return, and the tool will walk you through everything. If it recommends a change, all you do is fill out a new W-4 form and hand it to your employer. That's it. It's such a small step that can make a huge difference.
So let's bring this all the way back around. It is really tempting to want that big, fat refund check. But just remember what that actually means. You're losing access to your own money month after month all year long. That's money you could be using for, well, anything.
So, what's the real takeaway here? The ultimate goal isn't to get a huge refund. The goal is accuracy. It's all about ending the year as close to zero as possible, not owing anything and not getting anything back. That means you had the right amount of your money in your pocket with every single paycheck. Now that is smart financial planning.
If you found this helpful and you want more explainers that make these kinds of complex financial topics super simple, be sure to subscribe to our channel. We are all about empowering you with the knowledge you need to take control of your money. Thanks so much for watching.